This question tests understanding of the critical success factors of the planning and budgeting process. An effective budgeting system requires more than numerical forecasts. It depends on organizational commitment, communication, participation, and managerial support. Successful budgets align strategic objectives with operational activities and require cooperation across different departments and management levels. The key phrase in the question is, would most likely cause the planning and budgeting system to fail. Students should identify the factor that is absolutely essential for the success of the budgeting process. While historical data and employee participation improve budget quality, the commitment of top management is the foundation of an effective budgeting system. Without leadership support, budgets may not receive sufficient resources, managers may ignore budget targets, and coordination across the organization may break down. A lack of historical financial data. Incorrect. Historical data is useful for forecasting and trend analysis, but organizations can still prepare budgets using market research, estimates, and strategic assumptions when historical information is limited. B. Lack of input from several levels of management. Incorrect. Participation from different management levels improves motivation and budget accuracy, but some organizations successfully use more centralized budgeting approaches. C. Lack of top management support. Correct. Top management support is essential for successful budgeting. Senior executives establish strategic direction, allocate resources, resolve conflicts, and demonstrate commitment to the budgeting process. Without their support, managers may not take budgets seriously, resulting in poor implementation and ineffective control. D. Adherence to rigid budgets during the year. Incorrect. Rigid budgets may reduce flexibility and responsiveness to changing conditions, but they do not necessarily cause the budgeting system itself to fail. Many organizations use budget revisions or flexible budgets when circumstances change. Correct answer. C. Lack of top management support. Exam tip. In budgeting and strategic planning questions, top management commitment is consistently recognized as one of the most important prerequisites for success. Leadership support drives participation, coordination, accountability, and alignment between budgets and organizational strategy. This question examines the differences between authoritative, top-down, budgeting and participatory, bottom-up, budgeting. In an authoritative budgeting system, senior management prepares the budget with limited input from lower-level managers. In contrast, participatory budgeting allows managers at different organizational levels to contribute to budget preparation, increasing commitment, communication, and motivation. The key word in the question is accept, meaning students must identify the statement that is not a disadvantage of authoritative budgeting. A useful exam strategy is to recall that authoritative budgeting is generally faster and less costly, but it may reduce employee commitment, lower communication, and produce unrealistic targets because operational managers have limited involvement. Therefore, an option describing a benefit rather than a disadvantage is the correct answer. It may result in a budget that is not possible to achieve. Incorrect. This is a genuine disadvantage of authoritative budgeting. Since senior management may lack detailed operational knowledge, budgets may contain unrealistic assumptions and unattainable targets. B. May limit the acceptance of proposed goals and objectives. Incorrect. Employees who do not participate in setting budget targets are often less committed to achieving them, reducing motivation and goal acceptance. C. Reduces the communication between employees and management. Incorrect. Top-down budgeting generally provides fewer opportunities for information sharing and discussion, making communication less effective than in participatory budgeting. D. Reduces the time required for budgeting. Correct. This is an advantage rather than a disadvantage of authoritative budgeting. Because senior management makes most budgeting decisions without extensive consultation, the budgeting process can be completed more quickly and with lower administrative effort. Correct answer. D. Reduces the time required for budgeting. Exam tip. Authoritative budgeting. Faster, centralized, but may reduce motivation and communication. Participatory budgeting. Slower, but improves commitment, information quality, and goal congruence through greater managerial involvement. This question tests understanding of standard costing, an important management accounting technique used for planning, cost control, performance evaluation, and inventory valuation. A standard cost is a predetermined estimate of the cost of producing 1 unit of output under normal operating conditions. It typically includes standard quantities of materials and labor and standard rates for labor and overhead. Actual costs are later compared with standard costs to identify variances and improve operational efficiency. The key phrase in the question is except, meaning students must identify the statement that is incorrect. A useful distinction is that standard costs are generally expressed on a per-unit basis, while budgets are usually prepared for total expected costs and revenues over a period. Understanding this difference helps avoid confusion between budgeting and standard costing. Time and motion studies are often used to determine standard costs. Correct. Industrial engineering techniques, such as time and motion studies, help establish efficient labor times and production standards, making them a common method for developing standard costs. B. Standard costs are usually set for 1 year. Correct. Many organizations establish standard costs annually as part of the budgeting process, although they may revise them if significant changes occur in prices or production methods. C. Standard costs can be used in costing inventory accounts. Correct. Standard costing is widely accepted for inventory valuation and cost accounting, with variances recorded separately and adjusted appropriately. D. Standard costs are usually stated in total, while budgeted costs are usually stated on a per-unit basis. Correct answer. This statement reverses the concepts. Standard costs are normally stated on a per-unit basis, whereas budgeted costs are generally expressed as total expected costs for a department, activity, or accounting period. Correct answer. D. Standard costs are usually stated in total, while budgeted costs are usually stated on a per-unit basis. Exam tip. Remember the simple distinction. Standard cost equals cost per unit budget equals total planned cost or revenue for a period.